Hey, so today I want to talk to you about partial entitlement and what that is exactly. So partial entitlement is, let's say most veterans think in their head, if I already own a home with a VA loan, then I can't own another. And that's not true, because if you have entitlement left over, then you can take partial entitlement and do a calculation with the county loan limits and figure out how much of a loan the county is willing to give you, or not county, I'm sorry, the VA is willing to insure for you, right? Now, the difference between what the VA is willing to insure and the price of the purchase price, you only have to bring in 25% of that difference. And so it's really a great way to go if you can afford that 25%. So right here, this is a certificate eligibility. Now, a couple of things I want to point out. For those veterans that have a VA disability, right? You have a disability rating. Right here should say exempt. If this says non-exempt, then they're not tracking you have a disability. The importance of this word is this will get you out of paying the funding fee. And so for different loan types or different times you use the loan, the funding fee can add up substantially. It can be 3.6, 2.3, 1.65, 1.4%, or if you have exempt, you don't pay anything. So no percentage of that. Now, for the loan officers or people that just want to know, down here on the funding fee, it will say veteran is exempt from the funding fee due to service-connected disability, and compensation is $302 a month, right? So $302, this can go directly into their income, and it can be grossed up for 125%. This is all the documentation you need for that. All right, so getting back to partial entitlement, let's look at this. This veteran has used their VA loan before, bought a residence for $355,000, used $97,500 entitlement. So now we're going to jump over to our Excel spreadsheet. This section right here is for partial entitlement, right? This is below $144,000. This is above $144,000 purchase price. Now we're going to look at a purchase price of $600,000. We'll put in the entitlement used. We get it straight from the COE, $97,500, and the county loan limits. Currently, this is October 2022, and so our county loan limits are $647,200. And so $647,200 are the county loan limits. There's other high balance areas which may have a higher county loan limits, but right now we're using this calculation. In January 2023, these numbers will change. And so the beginning of every year, Fannie Mae comes out and gives us higher loan limits, okay? Or they reevaluate where we should be, I should say. Not always going to be higher, but probably will be. So once we run these calculations, we see that the transactions for the total loan amount is that we can go up to $161,000 in what we have left over, right? The remaining entitlement balance is $6,400 or $64,000, and we can get a maximum loan amount, meaning that if we're buying a house for $600,000, the most the VA will loan us is $514,000. I don't have my glasses on this morning, so I should have grabbed those. So 514 minus 600,000 means we need to bring in a balance of a down payment of $85,700, right? Now this right here is our loan limits, or our funding fee. And so this is why I was telling you it's important that we have this in there. Once we put in the right amount here, that's not right. So the base loan amount, we get this number directly from the 514. I was looking at it, I'm like, why is that all jacked up? So 514,300. That's going to give us that. Now, let's say that we're not exempt over here, and we do have a funding fee, and this is our subsequent use. That means that our subsequent use will be 3.6% funding fee, right? And that would have us bring in $18,514 that we'd be adding to the loan amount. Now, since we are exempt, or we are actually bringing in more than 10%, we can look at these other two funding fees. If you bring in 5%, you bring in 1.65. Bring in 10%, you bring in 1.4. This way, if anyone's ever doing a VA loan and they're not exempt, I will highly encourage them to bring in at least 5% of a down payment, even though they don't have to. It saves them money. So we go from $18,000, bring in 5% to $8,000. That's incredible. So, and then this down here is just a little checks and balance to make sure that we do have a 25% guarantee, because we all know that the VA loan actually does a 25% guarantee in order to make it work. It's almost like our mortgage insurance, putting 20% down. So if you have any questions, comment or just give me a call, add me on Calendly, and ask them for me. All right, thanks guys. Talk to you later.